Joining us now is Sara Vakhshouri, founder and president, SVB Energy International. Sara, it looks like the U.S. is very much intent on pushing through a reduction or even complete elimination of the role of Russian crude in many of the mainstream markets, together potentially with some European allies. What would they need to do to be able to offset most of that?
Well, as you just show in the report you had before this, the General Secretary of OPEC mentioned there is not much capacity available in the market to completely cover for Russian oil. And if there is any ban on import of Russian for even a handful of countries, there's going to be a huge competition of where they're going to get that supply. Even if we bring the sanctioned barrels of Iran or Venezuela back to the market, the market is not going to be adequate to cover for Russian barrels. And on the other side, we should see what would be Russian retaliatory action. Russia might increase its oil prices further. It might stop export of natural gas to certain countries that are putting a ban on its oil imports. So it's going to be very hard, and there's not really a quick fix for Russian oil export in a very short time.
To what extent would sort of re-addition of Iranian crude barrels into the market make a bit of a difference? And maybe also a reduction of consumption. We understand in Europe that was proposed, kind of reduce demand to help kind of bring the balance closer together. Yes, you're not going to be able to completely offset it, but at least to kind of close the gap.
Iranian barrels are not going to be much, especially in a short term, let's say within 1 to 3 months, that they are going to sanctions unwind on this country, maybe 500,000 to 800,000 barrels per day maximum. That would be just enough for what U.S. is importing. But if you look at it on a broader case, there's even the adjustment of demand. Yes, people would use less when the prices are much higher. They would drive less. But again, the adjustment of demand is going to take some months. It's not going to be immediate quickly. So if there is any barrels of Russian oil out of the market, it's going to put a huge pressure on the market. Even if we have inventories, both in OECD countries and U.S. SPRs released in the market, still is not going to be covering or substituting the huge volumes of Russian exports. So in the short term, there's not really, as I said, there's not any immediate solution for Russian oil as we see. But when we look into the medium and more long term, the story is different.
Yeah. I mean, the U.S. must have a plan. I mean, we understand they're talking to Venezuela, maybe to Saudi Arabia again. It's very clear that there's a big gap, and that gap needs to be sorted out. To what extent is the disruption already priced into the current price action we're seeing, both on the natural gas and on the crude oil side of things? And how much more could we see in terms of upside?
There is, yes, some of the disruption and tension in the market already priced in, but not for all of Russian oil. So it's going to be, obviously there are estimates for every, let's say, 1 million barrels of Russian oil being disrupted, how much prices would go higher. It's going to go higher, depends on how much of actual disruption. Venezuela, Iran, or Saudi Arabia, as I mentioned, the barrels of oil from these countries could cover for 1 or 2 countries. U.S. could substitute its oil and crude oil and liquid imports from Russia by, let's say, other sources. But this is all of the sources you mentioned are not going to be adequate to completely cover for Russian crude export. And also, again, as I said, Russia could retaliate by diverting its export of natural gas from, let's say, Germany to some other countries. It could add the prices, the OSP prices they could offer higher prices. So there is not really any capacity in the market to look all inventories, OPEC capacity, Iran and Venezuela together. They're not going to cover for 7 million barrels per day of Russian oil export.
Yeah. To what extent are you maybe a little bit surprised that after all the reforms that OPEC Plus has undergone, the displays of unity, of regular meetings, of coordination and cooperation, that at a time of a shortage like this, that they just, almost pretend like this conflict wasn't happening, the war isn't happening?
Well, look at it from OPEC's perspective. Obviously, price is an important factor, but they were looking at mostly their emphasis is on the balance of fundamentals. And as of now that we're talking, there hasn't been an actual interruption of Russian oil export that OPEC see a necessity to have a meeting to increase its production. So there might going to be sanctions or bans on Russian export of crude oil, but there hasn't been yet an actual physical interruption of Russian oil export that it requires OPEC emergency meeting. But also looking at OPEC Plus, how much capacity they have to bring online. They have been underperformed for the past few months, and they would perhaps reserve their spare capacity for the time that there is a real crisis in the market, an actual interruption of physical barrels from Russia, which at this moment that we're talking together, there hasn't been happening.
Yeah, I'm not sure I quite agree with that, because the market at $125 a barrel for Brent is sending a very clear signal that's very different from a world that's operating under $80 a barrel. I mean, when they meet next time, to what extent are they going to start to factor that in more aggressively in their decision, or do you expect them to continue to stay the course come what may?
As you said, part of the high prices is because of the priced-in worries and sentiments of the market for a potential interruption in the market, or now potential ban from U.S. on the market. So I would say for the upcoming meeting, if there is if there is an actual supply interruption, we might see a meeting earlier, or for the next meeting, they would definitely look into the prices. It's just very, very hard to anticipate what they're going to do, because if you look at their actual logistical capability to increase their production, how much more they can produce, there might be an agreement between OECD, US, and OPEC to all release inventories and OPEC production to address the prices. But as of now, we don't see any signs of such agreement in a whole unity, as you said, happening between all the members and non-members.
Sara, thanks for making it to the program. That's Sara Vakhshouri, the founder and president of SVB